Hey everybody, great to be back here with you, and happy Friday and great to have you here for our Markets and Sectors class. My name is Mike Fairborn, Senior Manager Trading Derivatives at Charles Schwab. Hey, today I want to take a look specifically at the markets, what we're seeing in terms of the market, sort of the interplay between interest rates, oil prices, and the potential for inflation as well. We're seeing some indications out there within the market. I do want to focus in on that. Of course, we want to see what is moving today, and we want to see what could be moving into next week. And we'll as we do that, we'll look at some specific example trades as we dive on into it. But I did want to say to welcome to each of you here as we've got you here. Hello to you, Will. He's got the sun out. It's definitely sunny here in the Salt Lake Valley. Not as hot as it is like in Denver, for example. They're in the 80s. We're still in the like 60s, 70s. But yeah, good solid weather. Hello to you, Kevin. We've got Scott, as well as Gary, Wrong, and many others here. Great to have you on board. And we're joined in the chat by Ben Watson. You'll see him in the chat as BW. Many of you, everybody knows Ben Watson does a great job on the live events. I've been out on those live events with Ben, and it's always fun to go out with Ben. And we've hit a couple of restaurants in our day, Ben. But folks, great to have him here. Any questions, comments you have, throw those into the chat so we can address those for you. By the way, those were restaurants that we were out on the road. Yeah, we hit some really good places that I definitely will remember for good. But on that, let's hit some disclosure items to get going here. Plenty to look at. So information provided here is for general information purposes only. It should not be considered an individualized recommendation or personalized investment advice. Now, the paper money software application is also for education purposes only. Now, investing involves risk, including for some products more than your initial investment. Futures and futures options trading does involve substantial risk. It's not suitable for all investors. We just put this down here because we don't trade futures here, but we do like to look at the charts. In addition, past performance is no guarantee of future results. And with that, that's going to do it for us here on the futures note topic. So let me just go ahead and dive on into our futures big picture here. I'm going to go ahead and actually we'll look at the S&P 500 real quick first. I know many of you have seen many discussions on the market this week, but hey, it just turns out that we are ending, this is the last class of the week. We got about an hour, just under an hour left in the trading day. And I wanted to highlight a couple of different points here as we look at the market. We talked about this a little bit last week, and I sent a tweet out on it too. But if we just flip this over to 200, we have a pretty good idea what we're going to see here. We'll just dot that line a little bit. And you can see over here, now we did dip below it. There's the possibility of a snap back here in the markets, right? We can snap back. There's no doubt about it. We can see that occur. But this is what a lot of traders will technically refer to as actually being in bear territory. And they'll use the 200-day moving average is literally, if you're above it, bullish territory, bearish below. It's not really a great day, to the downside here. I will say this, with that dip, we are entering into a little bit of an oversold range. As it stands right now, as you guys can see right there with the RSI. In fact, let me just do this. I'm going to pull it up a little bit more. Got to be able to see those lines. There you go. So right off the bottom there, the RSI. Now I have this set up to give us sort of a money flow gauge as well. And I want to dive right into that too, because I'm just looking for the possibility of divergence or not. Now, the thing you'll notice over here with the money flow is that money flow on the ES, we're just about at the same level here, but actually we've seen thus far, and this can change obviously, but if we look at a line just drawn across here, and I'm going to use a blue line, and by the way, it's going to be a straight line too. See, somewhat straight. I'll try it. Got to narrow it back down, but there you go. So that's about where we're at. You know what? I'm just going to do this. Forget it. I've not yet got the feel of this. Of course, we go down to our Thinkorswim tools. Just draw the line down here. And this is a real easy way to do it too. So I'm just not even looking over to the right-hand side. I'm just looking where the majority of my touch points are here and here. I'm going to click on it again. You can see we're virtually right at that support level. Now, this is really interesting to do because when you have a line like this, you can do the exact same thing over here. This will always draw you that straight line. Put the line right there, and you can see we're actually up in terms of cumulative volume, meaning that on this bar down here, there were more sellers relative to over here. Okay. Now that's interesting because we're below the 200-day moving average. Sometimes we get lighter volume on Friday, but we did not get the break. And we're still at it. So in other words, if this continues to kind of inch up, even as prices maybe consolidate a little bit more, that all else equal would be a positive. We'll see what happens. We're not even in the oversold area for the futures reference of that too, but I'm watching that. And what else could we be watching here? Well, you know, I've got the daily, the 30, and the 5 because we just get more data there. And the one thing we would probably need to see, I'm gonna go ahead and just draw in a line over here. This is like that 200-day moving average goes right through there. It's somewhere over here. So wherever that line's in at, I think it's going to be very close to that 6,600 level right here. And so you can watch this intraday, and you'll notice you have a big level of resistance right over here. Now, here's the thing. If you climb above that, that could be interesting. Watching these can be insightful. You're just getting a lot more data here, and we're clearly oversold here. So will we get that bounce? You know, we'll know when we get it. But right now, yeah, we're not getting it. We're trading down into this range, and it's quite interesting. Now, I'm going to do a quick switch right over here because I want to tie this in to our seasonality so you can see where the ES is at. And this is generally what we tend to get over here when we're looking at the past 5 years, 10 years. It's something similar to this. In fact, I'll just go ahead and make these comparable. And then we're going to talk about exactly what was happening this week. We'll look at the NASDAQ first, though. Okay, so we could pop in over here. We're looking at, let's do that first. Let's go over here, and I'm going to make this comparable in terms of price. So I just went to the general chart settings so we can see that. And you can see where we're at because it does look different. In fact, we did go down, but we're continuing to going down. And we have a pretty good idea as to what might be causing that within the markets. I would say that the markets kind of moved from a bit of a soft landing potential and the possibility of, interest rate cuts sort of later into the possibility of an oil sort of a acceleration or a shock, as they say it. And that could keep inflation higher. So we're fighting that as we look at, I'll even go a 10-year over here, a seasonal approach, which generally this time of the year, you can kind of see there was a bit of clear this off for a second, a little bit of a bottom through here, at least over the past 10 years on average. And generally you might be actually up in March, but this time over here in April is interesting. The question is how long is it going to take to kind of get everything back in place in terms of the markets? But if we come back now, and I'm going to look back here at the NDX, okay, we're selling below this level too, okay? We're towards our lower range that we've seen on the RSI. Markets sold off this week to a large extent. I think what could be causing a lot of that tension, obviously, is here we are floating right at that 100 level, a very interesting level to keep in mind. I mentioned a little bit of this yesterday in my class, but here's the thing. You're at 100, and we're just kind of holding that level. Now, as long as we're up here, there can be sort of tension in the market, and there's a focus on that geopolitical risk, and that could have potentially changed the outlook for inflation. We saw treasuries respond to that a little bit this week. Let's go over here and just go the /10Y. Okay, that's your 10-year micro. We're still dealing with futures here, just looking at it. So, see the spike over there? That's a spike, right? And so instead of treasuries kind of acting like a safer haven, those yields rose because the market started pricing in the risk that there could be sticky inflation going forward, and that could delay cuts. It could even enforce a tighter policy out there in the market is one way to look at this, right? That's a spike. So they're saying, you know what, if the shock continues, because remember, when we're looking at oil, we need to look at it through the lens of inflationary pressure as well. And that can change the inflation rate outlook. And it can't, because it can hurt the rate cut expectations too. That's what we saw. The 10-year, one of the reasons why, analysts, etc., they're thinking about the reason why that shot up higher. Now, could it be a temporary energy shock, or could it turn into broader, higher inflation? That's what the market begins to price in if there's more risk. But just some key points to note here. It's buried here, but that's 100. It's funny we stopped right at that level, but it's kind of stating here, if you start to go above, well, there could be an acceleration of the VIX, the volatility index, which is already actually pricing it in right now, a little bit of an acceleration. We'll see what happens. Sometimes, though, too, Friday is not an unusual day. If you guys have ever noticed this, if you look back at market just data in general, Friday can be a sell-off day. Sometimes it bottoms in Monday, bottoms by Monday and starts to go up the rest of the week until about mid-Wednesday and goes down. That's kind of like some traders will look at that as a weekly kind of a time frame to kind of anticipate. So sort of a bottom in Monday, running up to about mid-Wednesday. It sells off a little bit Thursday. Friday, bottoms Monday. That's kind of a general weekly pattern. It doesn't always happen, of course. There's going to be a lot of variation there, but it is a Friday. We'll see what does happen here. It is also, too, options expiration day, and there could be more volatility around that too. So keep that in mind. I don't actually have the line over here. You can get those option expiration lines. You can put those in over here too. I think many of you have done that. Time axis. There you go. Show expiration Friday. Let's just show it right there. So we've got one right there. This is just your monthly expirations, and they can be quite helpful to have. But that can provide additional vol as well. I'm going to go ahead and just take that off now. Okay, so with that in mind, if we see prices go, see the VIX go up, well, we have an idea what that could do to the markets too. So these are just the risks that we need to be mindful of here. This does not look great. I mean, in terms of just like a rounding pattern, a rounding top. I mean, that's pretty clear. It's rounding, and it's kind of actually, there's a little bit of acceleration there. Again, it's Friday. It's options expiration. There's more volatility. We are entering that oversold zone, but a lot of it can come down to, are we going to start getting, higher highs or higher lows? Because right now this is technically, I guess we're kind of moving into that lower, down about 100 right now on the SPX. So kind of a lot to consider, as we look into this. And so what I want to do right now is just dive right on into our sectors and see what's really been holding up long-term first, but then also short-term. All right. And Ben did note, hey, there is a feedback link in the chat, folks. If you're getting value out of this discussion, there's just a couple questions on there. There's also a section for a comment if you'd like to do that. And by the way, yeah, if you're getting value out of this discussion, just smash that like button. Be sure to follow Ben Watson on X. He's got tons of followers there. Ben Watson CS, Mike Fairborn CS as well. Okay. Well, with that, I'm going to shoot on over here so we can just narrow this down a little bit into a 6-month rotation grid. Let's go through it. And by the way, boy, that stands out, doesn't it? Whoa, that stands out. That's the market. We're saying, where's the relative strength compared to the market? And I want to look at a couple of different things because these are all 6 months. Now, the question came in one of my chats. Hey, Mike, can we take something like this and turn it into a 3-month? You can. What you'll want to do is just, all I've done over here, click on this little sort of hamburger icon is what it is, action icon. Come down here, maximize the grid, and then just go into your chart periodicities, go down into the 3-month time frame. I'm not seeing that. We can just look at a time frame here. Just go into a 3-month, just like that. Click OK, and OK, you get a 3-month as opposed to a 6. I have a 6 and I have a week. I realize there's a big gap between those two, but we want to look, just broadly speaking, what has held up and what's really gotten crushed. And I'm just going to put a red through some of these. Here, financials, there's been a pretty big hit there over the last 6 months. I mean, in other words, it's dropped with the market, probably one of the leaders. So has technology. Technology's dipped, at least technology companies in the S&P 500. Kind of like these three really show the downward move. Everything else is kind of flat to upward spiking to even upward and flagging a little bit. Obviously energy, the strongest. We know why. We just looked at some of that. We could see some of this flagging over here. Gold, really massive in terms of a pullback there. Industrials kind of tied in, and these two have been kind of linked to a large degree. Industrials, there's some overlap in there for sure, but these two are very closely linked. But this kind of looks like a possibility of a flag pattern. We'll see what does happen. But staples as well, kind of sideways, and others too, right? Okay, now what we want to do before we go into some of these as well is I want to, because I did want to take a look at some of the materials and see just take a quick look at what's going on with gold real quick before we dive into some other areas. But here's our 1 week comparison. And so now we get a really decent feel as to what's moving up this week. Remember, financials was down so much? Actually, financials spiked. You know what's been going up? IR. Interest rates have been going up a bit higher. Sometimes those institutions can do better under those conditions. Interest rates and really energy. Okay, so those two really the strongest. We've seen discretionary still get weak. Materials really weak. Industrials as well. Pretty much across the board. I will say this. Within healthcare, we've actually held up a little bit this week. But by and large, almost everything else, staples just began to rebound like today. This was part of a larger term flag pattern, and so too was healthcare. These are a little bit too close sometimes. You want to get that bigger perspective of the 6-month chart. And you guys can go from there as well. But let's do this. Need more nature pics. I just saw that. That's funny. Okay. I've got several. I should actually post more of those. I'll do those on X. I will. I'll do several of them. Let's get like 3 more today or something, or 3 today, 3 over the weekend. All right, let's do this though. With that in mind, I want to go over here, and before we go into individuals, some of these individual stocks, let's take a look at GC. So that's a pretty substantial dip in gold, and we're seeing the miners go with it too. If I just look at it here, in fact, that pullback, you're getting kind of close to that 4,400, which there was kind of a major test here, over here, and let's say through here too. Look at this. Right there. There. Here we are again. We don't know how much, what we're going to do to the rest of the day now in terms of dipping, but you can see kind of where we're at right now, and this could be an area where we do bounce. One of the things, though, on these big sell-offs, a lot of times we're looking at not just the intraday chart, but take something like a 10-period moving average, and this is going to still be a ways away from it, but notice how far away we are just from, let's say, a couple, basically 10 days. We're looking at basically 2 market weeks, 10 bars. We're a long way. I mean, we left it behind these last 3 bars. But I just gave a little bit of a hint there. The last 3 bars. Remember that candlestick pattern that we've talked about quite a bit? It's the 3 soldiers down. And when I say 3 soldiers down, folks, I'm referring to 1, 2, and 3 soldiers down, just like that. Just like up here too. 1, 2, 3. Sometimes you get those consecutively over big moves. You might be close to a reversal. That's kind of a big move. And it's kind of interesting because what's it going to take to get gold coming back up? There's definitely, there's geopolitical uncertainty, but what are we seeing over here? I don't know. It's interesting to see it dip, but is it a reflection that things might be kind of taking a turn in the Middle East in terms of, I don't know. It's really fascinating. But, one of the concerns I had seen yesterday was that Saudi Arabia was getting hit by a number of different areas, and they were on the verge of responding back to Iran. And we talked about this last week. If they respond back to Iran and Iran starts to try to take out the oil infrastructure of Saudi Arabia, I think they're actually working on some truce as well so that doesn't happen, because then whoever takes over in charge, I mean, how are you going to rebuild the country? So that just kind of like accelerates the risk maybe substantially there if you start knocking out all those oil producers or portions of them in Saudi Arabia, in terms of just oil prices. It's going to be interesting to see. It's an interesting one to figure out because, gold dropping, and normally gold's been strong. You think it might be strong under risky geopolitical situations, but maybe there's some developments we'll just have to wait for. Maybe we'll see over the weekend as well. But I think really circling back to that 100 is going to be key here. I think actually the price of oil is driving much of the volatility and potential risk within the markets, all the way down to stocks too, right? Some of those areas, though, that we did just see responding back, I want to look at some of these companies right now because I'm going to go ahead and just take a look over here in the S&P 500 because, like some of the staples specifically, there we go. See, consumer staples are known to be sort of in the defensive area. We actually have 36 of those. But what we can do is just grab, because we saw some of those bouncing back, but what's been performing over the last 1 week. So we're just using this ThinkScript here. ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data that's flowing through them is good and we have good data, then we should be, we should get something very close to what we're after here. I mean, what they do is they try to set these up. We'll give that just a second to load up on these 36 companies. But what we're taking now is some of the insight that we gathered over here from the sector. I'll go back to the 1 week right here. And as we look at that 1 week, we can see that we saw a little bit of a bounce in staples. Remember, staples is flagging monthly, 6 month. You see it right here? So we've had a consolidation. And what are we getting just now? A little bit of because we went into a minute level and we looked at it. Over a 1 week time frame, we're seeing some bounce starting to occur here. It's almost like the Cahold. It's not a Cahold because it's not closing above the high to low day, but it's just sort of like a reference. Are we bouncing off that bottom? Is that flag ready to start moving? Short term, it is starting to bounce. In big picture, you can see it here. So back to the scan tab, S&P 500 consumer staples. Here are the performers on the week. Okay, so some of these companies here, let's just take a look at Mondelez, STZ. They haven't really performed a lot. I mean, a lot of them have been sideways, but are they on the verge? And could these be some of the companies that you could be watching into next week? One way to do that is simply just have even just the percent change column over here and be watching it early in the week for any potential changes. Let's go ahead and take a look at some of these right now. MDLZ doesn't look great. CLX, see the pullback. Maybe it's on the verge of a bounce. I don't know. That's a big sell-off in some of these. I know PG has sold off substantially as well. But sort of, I don't know, will it be a higher high, a higher low on some of these? That's a big, wow, that's a big move. That's over 20 points, actually, from the high. That's over 165 to 145. We had said back over here that these companies were starting to behave, many of them, like growth-type stocks. We're seeing the pullback here. If it starts to do one of these, higher highs, higher lows, it might actually recover because many of these staples will act like growth stocks when volatility starts to spike. And you can kind of see what I'm getting at over here as you look at this. See the spike? You come down, and then it can continue up. These are very, very interesting at different phases. That's a big spike daily. We're looking at a weekly right now. Comes down. See the follow-throughs? I don't know if it'll do that. We don't know. But it has been sort of prone to have a big spike, test, and then, a higher low. So watch some of these. You'd have to say that probably, many of these are dividend-paying stocks. And by the way, dividends can be cut at any time. This one, yeah, there's a dividend in there. Like, say, for example, if we're just looking at the yields on these. Yeah, see, these are going to be starting to get up there because you're getting kind of towards the lower end of the range. That 3% can be attractive to income-minded investors. And that's something you could look at over here too, like CLX. Look at that, 4.65%. We're not just looking at this because of the dividend, but we're saying because it's kind of trading towards the lower end of the range where it will fall sharply, spike up, and then make a higher low. Well, sometimes income-minded investors could be interested. By the way, also a fairly low beta too. So defensive type stocks could start to recover if you literally start to see oil. I mean, you can watch it, but yeah, just see what happens. They're defensive because consumers, they do go through the process. They consume these. They're staples, they're necessary items, whatever the case might be. All right. So we looked at that. But there's a good list over here. And again, you can always come over here and just take a look at a watch list, type that up, and then just throw it to a watch list and click on them quickly. But there are some of these here too, like, Walmart has been kind of like a standout. That one's been up for quite a while. And that one's kind of coming back down and retesting a level here. Okay. Think about consumers, necessities and things like this. There's Costco. Wow. 1,000 range. Yeah. And Costco had been down for a little while too. Yeah. Oh, okay. Well, on a weekly chart, yeah, it'd been down over here. But yeah, when you look at it weekly, over 15 years, my gosh. So we'll see what we get there. But one of the, just a quick note on these companies, you're either waiting for a bounce off support or, just a break above a resistance level on many of these. All right. So wanted to hit that. There's just so many different areas that are moving here, but many of the companies have been sideways, and we don't know they could bounce up or down depending upon what could happen in the oil markets. I'm going to throw out a few of these in oil specifically. Like here's Halliburton right here. Halliburton, you can see, has been in a sideways range. It just barely broke out. It's not running. This is the oil service companies. It's not anything like DVN, which is broken out. This is the one we had where is our target? Okay, it's still up a ways from our swing trade class, but this is one that's been going. Let's see, EOG. Okay, oil upstream companies we talked about last week, they seem to still be trending, right? These are companies whose cash flows associate best with an increase in oil prices. EOG and others. A quick way to find these two and to find out what's really moving over here. I'm just going to hop back over here into my energy. You've got equipment that we just saw, but I want to look at these specifically. The refiners. Well, let's see, drilling, gas drilling. You know what? I'm going to do all, and then we'll see how many we have in the S&P. So we only got, of this group in total, we have 22 companies. We can see that oil and gas storage and transportation, there's several of them in here, but really, I guess you could say those are some of the performers as well. But look at this group where really the strong trends remain. I did a class this week on low beta breakouts. So those that are less than 1, talked about this in the swing trade class, and many of these have still continued to move, right? But that's still kind of the play right here as long as energy remains elevated. We looked at below 70. I think every one of those is below 70 right there, except with the exception of this one, but they're definitely less than 1 of the market as well. So you're getting lower beta. They'll move as fast as the market, but at the same time, this is really where many of the trends are right here in the oil upstream markets. Let's take a look at within this group, APA. There we go. So still that continuation to the upside. This was a low beta breakout. We were looking at 20-day new highs right there, right over this level. And they're still continuing. This has had a number of those, you'd have to say 20-day new high breaks over a period of time. But OXY, Occidental, also in the group. Okay, still breaking up. This is one that was testing these little flag patterns in here, are some of the ways that traders will look to trade these OKE. The other one. Now, this is the one I wanted to highlight because we're just breaking, just barely above the range. It's a little bit of, this is nat gas, by the way. And nat gas has been a little bit slower, but it is an alternative to energy. You can see it right here. Now, if this was sort of a flag pattern, we have a long flag right there, right in place. We pulled back and we consolidated a little bit, but we've actually already begun to break out above those levels. If we were to take and project this forward, you can see where this might end up at. We've got, as we look at it, that's up, well, that's up 20 points. If I go 20 points from here, so plus 20, because all I'm doing is measuring the flag move from here to here, the plus 20 is going to take us right to the century mark. So another area where some traders would end up selling anyways, because there might be somewhat resistance, but you can see right near the prior highs over here, at least on this 1 year chart as well. A little bit of a shooting star pattern right here, but one that traders could be looking at. Now, by the way, we talked about this in another class. Actually, we looked, yeah, I think it was in the same class, but in the swing trade class, but EXE, biggest nat gas provider in the US is what they claim. We've been into a sideways range over here. Now, I'm going to take a couple of these out real quick. I'm just going to highlight this. What do you guys see over here? How is money flow doing relative to prices? Is money flow breaking out? Could there be more accumulation coming in right now? Well, I'm drawing a line through here, just looking at the charts, and it's holding here. But if I draw a line where I start over here with money flow, folks, we're clearly above that level. You see it? And you'll notice also we're compressing. Now, what I wanted to do while we're here is use one of the indicators that we'll look at from time to time. We've run some scans on it too. Let's just pull it up right now. It's a measure, the TTM squeeze, of sort of a rare volatility squeeze. Bollinger Band within the Keltner channel. Oh, I got it all? No, I just wanted this one, sorry. I don't want that one. I just want this one. And when it starts to go red, there you go. Okay. I was curious, and it is right there. So now you're getting also a measure here. And you're saying the Bollinger Band is within the Keltner channel. Now, anytime those are squeezing, it's lower volatility. And we know that, when prices tighten up, they can then bounce one way or the other. Now, this here would be likely a play on oil prices going up, right? Higher here, because nat gas is an alternative to oil as well. And there are a number of different machines. I know that years ago, a lot of the heavy movers out there within the gold and silver miners, they shifted their engines over to nat gas because it was a lot cheaper to run. Well, nat gas is cheap. NG. We'll tap into some more futures. Look at that. This was that big energy shock, right, that we'd seen over the summer. Winter. A big energy shock over the winter, but then all of a sudden, I guess the storm went away really quick too. But you can see we're really quite low here too. But just jumping in on something like this, we're getting kind of some extreme measures. But if somebody was looking for a play of energy going up, this has kind of been building for a little bit, perhaps. They could put a trade on here. I'm going to put a trade on, and what we're going to do is we're going to have a target here. It really depends on, actually, I'm going to just start it with a potential exit level, a stop level, because stop levels aren't guaranteed to fill at that price, right? But if we set it below the range, and that's a ways down, it's like 3-4 points below, you kind of want to position it so you can set it up. But let's just do a trade on this. So I'm going to go ahead and right click right here, buy custom with stop. I'll adjust that stop in a second. I'll just do 100. I'll just a round lot as an example trade here. The stop order is going to be a good tail cancel let's just set this down a little bit. I think it was closer to 103.5, and click on confirm, just as a trade example. And this is just kind of there could be a number of energy stocks if somebody's looking at energy that they might be somewhat interested in, for example. But here's your buying power effect, etc., and different price levels. Let's just send this in as a paper money trade. Simply an example, not a recommendation at all. Just to say these are some ways that traders could participate. That's kind of a range that we've got set up over here. But that is the trade. It's kind of sitting. What's interesting here is that's a breakdown of it. And we've really just broken it down even into a tighter and tighter range. And so this tight, will we get the break one way or the other? You could always raise this up higher, your potential exit level if you wanted to as well. Just a paper money trade, but yeah, just looking at it. So there you go. But like we said, when you get sometimes these consolidations, you can get a pretty big breakout move here. I want to throw one more in here because this is another class we talked about, and I wanted to look at the ADX. The ADX gives us a little bit more of a real-time feel where it might be at, what we said in that class. Does anybody remember that class? If you could start to break above, like say, for example, 15 or 20, if you're below it, it gives you a real-time feel of really, really a condensed price range. And that's what you're getting over here. See, the ranges of prices are getting tighter, tighter, tighter for a move. Okay, well, anyways, we highlighted a couple of different points here on this particular stock, but this is one that was right in that energy field that has been strong, but it's been a little bit of a laggard as EXE. These are right there. It is. Expand energy. So it says oil and gas, but we're really talking about nat gas. Okay. All right, but take a look at some of these other ones. So there are several that we could, potentially look at. Let's continue on. Into the technology area. Technology. There have been some of the companies in technology, AVGO, that have been a little bit flat. My gosh, this has been in the TTM squeeze for a very, very long time. And I guess you can see how that could be the case. We've dipped and we've just gone sideways here. Now, a lot of traders will say some of the drivers out there are going to be like NVIDIA and Broadcom, and a lot of the other companies, are kind of tied, connected to NVIDIA. If NVIDIA is doing well, it gives you a pretty good sense that the other companies are investing, a lot of capital investments, whatever the case might be. But we've been closing that range for a long, long time. I mean, we've closed that and we have held it. So just like we were looking at that expand energy in technology here, and this is, again, these are trades that we were just looking at. For example trades into next week. Look at this one. Do you see the range that we're in? Some traders, we've talked about this before, and that's really close to a big round number at 300. They try to put some positions on down here because their expectation is at least we think we'll bounce back up to the top of the range. That's approximately 50 points, 300 to 350. Notice we did it here, we did it here, we did it here. That's the question. What's going to happen here? Now, these are kind of inherently sort of like bullish type moves, but it could really depend, because we might be setting up for a pretty sharp move over here with that tight range. That's what we're talking about. In fact, you can see some of that over here before we went to this long channel, because actually we've been here literally at this level since September of last year. Fall. No, it's not even fall. That's summer of last year, right? Somewhere in there. Yeah, this is definitely summer, I think. Summer of last year? Maybe not. Anyways, it's close. Anyways, look at that. You're right there. But notice down here, that consolidation. Sometimes you can get spikes. I know there was a earnings announcement related to it, but that's a lot of times what you might find over here as you look into some of these companies. All right. Now, I did want to come over here too and just highlight that market and sector review, because you can see over here we are starting to still come on down with the advanced decline line. That is a lower high and a lower low on the NYSE. So they're starting to fill it. And again, remember what we saw? We saw interest rates shoot up. We saw those interest rates shoot up. And there, there's just some potential risk out there. Now, on the other side is for the McClellan oscillator, if we do recover, McClellan says, again, this is based on the NYSE, but if we go below minus 100, which we are, and then we go back up above minus 70, and we haven't been able to talk about this indicator for months. Okay, we haven't had it for months, where it went below minus 100 and back up above minus 70. And there was a bit of a rally, at least at the top of the range. But now, since we're down here, if it can manage to get above that minus 100 and get above, that is greater than minus 70, then it's according to the indicator, it's an oscillator, 2 to 3 weeks of a rally is the minimum. Okay, we'll see if we get that, but that is exactly how that indicator rolls. Okay, next up, SPX EW. Yeah, the sell-off's pretty broad range, right? It's across the board. We saw that with a lot of the sectors coming down, but look over here with me. First time since April of last year, and where are we almost at to? April again. We'll see what's going on here, if that can actually end up moving or not. Okay, or not. But, all right. So with that, too, I wanted to say that we got another Omen spike. Okay, so key point on the Omens. It's been a while since we've had even two. Now, they're not exactly back to back, but they're close enough. If you see it on the pullback, the key point on the Omen, folks, and this is just a key point across the board. If you come down and consolidate, you come back up and make a lower high, and you start to come back down with, I'll put some red lines in here, with additional Omen spikes. Now you're getting that weekly longer-term trend coming together with it. Now, it might not be anything because we don't have a change in trend yet. It has to be a weekly change. Just like this. This is a great example right there. Great example. Okay? We saw the prior spikes in the Omen right here. And again, that Omen is a 52-week and a 52-week. One is lows and one is highs. If you get enough lows relative to highs, you can break the markets can break. These are balanced out enough. It can create a chasm in the market, and that you'll start to see it in the trend. You see it over here again? Look at right there. They hit again. This is a weekly chart, 5-year weekly. We saw it over here too. We had some of the spikes here. We broke, and then we broke sharply down here. Now, this is a fast and large move, but we got the same Omen kind of a theme unfolding here. This one didn't matter, and it didn't because there was no downward trend. It's the trend. So we need to be watching this one each and every week, and we will in this class for sure. Okay? All right, everybody. Well, hey, a quick look over here. We're holding this lower range in terms of highs, etc. Not too much. We've looked at this point, looked at the 30-minute chart. I did want to get to our last chart here, which is really the volume profile. Just wanted to highlight this is a key point. We have to get a volume read here, but you'll notice over here with me, this is where we really dipped. Now, prices can move fast up to the next spike, which is right here. And then they can accelerate down until you get to the next spike. Now, there is, though, an area where you could move back fast here. Okay? There's not a lot of volume here. So any sort of a news announcement one way or the other, there could be a kind of a push. Like this range here. You could bounce to the top of this range quickly. You could fall to the bottom of this range quickly. Okay? So just keep in mind, a news event, positive or negative, could have an impact on the markets. All right? But this week, we continue to see many of those oil type stocks really doing well. Some of those low beta breakouts. This is what we discussed this week. I'll just highlight this if you guys are interested in the swing trade class. It's just right here, how to build a low beta breakout scan. It was specifically on these companies. We're just in the playlist here. Love to have you guys subscribe too if you're interested. Yeah, got a lot of great stuff from Ben in these as well, but teaches a lot of great stuff. Let's do this. There is the low beta breakout. We build the scan in there so you guys can have that going forward, but it's also useful for, you know what? It's also useful for staples because they're low beta. So are utilities. Utilities, energy, and staples. Those are all defensive, but oil could be the strongest performer, and that's what we had a lot of those showing up this week. So I just want to make sure you guys had that scan. And with that, I think, yeah. So we'll see. We'll keep an eye on the market, but hopefully that gives you a sense of upside, downside, folks. If you got some value out of this, smash that like button. And by the way, have a fantastic weekend. It was great being with you. Take care. And thank you so much, Ben, for your help in the chat as always. See you next time.